You are listening to ChartingWealth.com for Wednesday, the 1st of June, 2016. Let's jump right into things. What do we see going on the total market chart, which is IYY? That is an exchange-traded fund that tracks the entire market. We see a crossover going up on the two-day chart. The market overall was up a mere 0.04%, so 0.4%. It was up over the course of Tuesday. Again, remember the market was not open on Monday for the Memorial holiday. So on Tuesday, we completed a four two-day candles, so 8 days of movement up. The last three two-day candles have been above the Bollinger Band, so really increasing volatility throughout the whole market. Continue to have a green up candle that was formed. It lost a little bit of its energy, but we have a crossover going up. Derivative oscillator went up markedly. And we have at the end of that candle a crossover going up on the two-day chart. Now, if we look intraday, that is on the 4-hour chart, the half-day chart, what do we see? Well, we see a little bit of a pullback on the 26th, both in the morning and in the afternoon, and then up movement on the 27th. Again, 26th was Thursday, 27th was Friday of last week. And then on Monday, we see some up movement in the morning with a doji down movement in the afternoon. Actually, a lot more down movement throughout the course of the afternoon than up movement. We have a longer wick at the bottom than a wick on the top. And we pretty much have the opening and the closing right around the same place as far as our Heikin Ashi type of candlestick goes. So lots of indecision at the end of the day. And we haven't seen indecision like that since maybe back at the afternoon of the 23rd. The market had seen some up movement, leveled off, and then shot up again after that. We shall see what we shall see in regards to this. We do see a little bit of a closing in, a converging little bit of the derivative oscillator, a decreasing of the energy of the derivative oscillator, and a bit of a converging of the MACD and the signal line. Again, not crossing over yet on the 4-hour chart, but losing energy. So, again, we will continue to watch just crossing over, going up on the two-day chart on the total market. So we'll pay attention to that. Let's see what happened. SPY is a bit of a different story. It was down. This is the Standard & Poor's 500, 0.16%. We see the market topping out right around where it was on Friday. Again, derivative oscillator has heated up. Technically, we have a crossover, but that could pull right back through on Wednesday if there is a down day. So continue to watch. Derivative oscillator did increase its energy, and we're looking to see if we're going to see a confirmation as that new candle starts getting made on the MACD, if that crossover is going to actually be an actual one. Now let's look at what happened in the afternoon on the SPY. We actually have a red filled in down candle. Now, when we have red filled in down candles, that tends to mean a strong move, and we are seeing that being confirmed. So that is something, again, to pay attention to. That's only on the 4-day chart. The 4-hour chart, but we do see the MACD and the signal line getting close together, and derivative oscillator has been losing energy since the afternoon of the 26th, Thursday the 26th. So let's just continue to pay attention. That's where we are on the S&P 500. Lastly, as far as the indexes go, we're going to go to the Qs. The Qs is, of course, the NASDAQ 100. What do we see going on there? Crossover going up on the 26th, confirmed. And we have we actually have 4 up candles. So the NASDAQ has been going up for a while since it bottomed out on the 20th. That was actually the Friday before last. So over the course of this past week, starting on the 24th of May, we saw the market booming up, ended that 2-day candle on the last day of the month, Tuesday the 31st of May. So again, confirmed up moves, and the derivative oscillators continue to heat up, and a diverging, that is a moving apart, between the signal line and the MACD. Now, if we look at the 4-hour chart, what do we see going on during the day? Well, the day ended with a red spinning top. It had been strong up movement since the morning of the 24th. First red candle we've seen, a bit of hesitation late in the day. Just continue to watch that. If there indeed is a pullback on the Qs, might be a good point for someone to look at getting in on this up movement. We're just going to have to wait and see on that. And again, like we said, total market is in a confirmed up move on the 2-day chart. The S&P 500, not quite yet, although it appears to be getting close to that. We'll continue to watch. And of course, for 3 candles running since the crossover on the 26th, 3 2-day candles, so 6 days, actually 8 days altogether if you look at the candle prior to the crossover. So we've had a strong up move in the Qs. Qs is in a confirmed up move. Now lastly, we'll take a look at gold. Gold is down 0.16% for the day. Sorry, gold is up 0.37% for the day. I was going back to the S&P 500. Gold is still below the 2-day trend line. So on the 2-day chart, we have actually 5 down candles, 10 days of strong down movement on gold. First up day that we've seen. And again, the candle did end up closing out. So what we are looking at in regards to this is we have a green candle on up movement. And I am sorry, we are not yet seeing a closeout on that candle. That candle has not closed out yet on the 31st. It's the first day of that. We'll see that candle close out on the odd day on the 1st of June. So we do have a green up candle at this point, still below the 2-day trend line. We will continue to watch that. Remember, gold crossed over going down back on the 18th. Same time we saw the derivative oscillator crossover going down on gold. At this point, we want to take a look at the 4-hour chart. What do we see going on there? Again, gold's movement is still below the 2-day trend line, and gold is bottoming out somewhere around 116, something like that. And what it did over the course of Tuesday is basically a little bit of up movement, again, not even recovering what it went down in the afternoon of the 27th. So we will continue to keep an eye on what's going on with gold as we watch the rest of this market. And again, we get a nice pullback in gold. We may be able to find a re-entry point there. So thank you so much for listening. We appreciate you being with us. We are always happy to be here for you. We love to hear from you. If you've got questions, concerns, or problems, please always write to a CW. That's CW as in Charting Wealth, cw@chartingwealth.com. Feel free to email us. We love to hear what it is you need, what we can cover better for you, questions, problems, concerns. Also, if you appreciate what we do, main thing we ask you to do is please go to our place at iTunes. Just put in Charting Wealth to search for it. We have 2 podcasts there, video podcast of our weekly review and forecast. We also have the audio of that every week, plus the daily audios. We are happy to have you subscribe to those, and please give us a 5-star rating and say something nice about us. It helps us so much with the metrics and lets us spread our message to more people and help more folks get used to reading these stock charts and figuring out just what's going on, because it is possible to read these charts. That's what we are all about. Once you can read the charts, hey man, you've got the roadmap to the market. So important. Whether you're a value investor, whatever, you always want to buy at the right price. Being able to tell where that stock price is going is so important. You never want to buy at the top. You always want to buy at the right place. You never want to sell at the bottom. So again, learn to read these stock charts. We got lots of great valuable material at the website, chartingwealth.com, lots of good training, and we're willing to produce more. We particularly like to have it driven by the people that listen to us. So the more you need, the more you ask, the more we will produce. Thank you so much for being with us from chartingwealth.com.